Hello and welcome to Closing Trades. It's an interesting afternoon of trade. Lots of stocks buzzing around in the session. Lots of mid-caps up and about as well. You can name an RCOM, you can name a Delta Corp, you can name some of the large-cap index movers as well, which have done extremely well for themselves in today's session. So interesting sessions really. Look at an HDFC, for example. That has done extremely well for itself in today's trade. Will come up on your screen, so strong gains out there. Reliance Communications has done fairly well too. So a couple of these stocks are buzzing around in this session. I think aside of that, a couple of stocks on which there were announcements as well, and Eveready Industries is one, was extremely active. Should pull up today's session as well and see what Eveready has done in trade, close to a 1% up in the green. But I think we have the management with us. Mr. Amritanshu Khaitan, ED of Eveready Industries, joins us right now on the phone line, or rather on the show, to speak about the outlook ahead. Good having you, Amritanshu. Thanks so much for joining in. Let's start off with understanding your growth plans, which you plan to brief the media today about.
So basically, if you see, Eveready has traditionally been a battery and flashlight company for the last many years. And last 3 months, we have started launching a new range of products to boost the company's turnover going forward in FY 13-14. And today we are unveiling a range of rechargeable based lighting solutions and also a portable fan, basically targeting at the power cut areas in India today. And if you see the situation,
Okay, I think there is a bit of an issue with Eveready, so we'll just get back to the management in moments from now. But the market demands attention. A strong show really put up by the index. Let's get in our technical experts to speak about the index. 53 points higher, 5550 for the index. Ashwini Gujral and Mitesh Thakkar with their sense of the charts. Gentlemen, afternoon. Thanks so much for joining in. Ashwini, a bit of a surprise. Normally when Europe opens, we tend to drift lower. It's happened 5 days in a row until yesterday. Today's trade, a bit of a bounce back, 54 points higher for the Nifty. What explains this one? And is this an opportunity to essentially initiate shorts, or do you think this can actually go up a bit more?
Well, if the same thing happened every day, I don't think either of us would be here. So, once it becomes a consensus sell, whatever the bad news, the view, etc., the markets do tend to bounce back, and they bounce back so sharply only when it's a short covering rally. I don't think genuine buying happens at this speed. Chances are that you are getting your 100-point pullback rally. Now, I don't think there is any need to go long unless you are a couple of hours type of trader. What you should do is that trail the lows of every day as a stop to sell now. So today's low is say around 54.80. So, trail it tomorrow. If we get some more bounce back, say it's a 3 to 5 day type of rally, the moment a previous day's low gets taken out, it should, make you enter shorts, because I don't think, this market will turn around so easily, and in this sort of a V-shaped manner. It will turn around, once it makes a fresh base. The chances are this is a 5600, 5630 type of a pullback. Individual stocks, still the weak stocks you can go short on. The stocks which will rally are strong stocks where you'll see short covering. So HDFC is a buy with a stop of 768, target of 792. Adani Enterprise a sell with a stop of 205, target of 192. And Pantaloon Retail is a sell with a stop about 150, target of 138.
Okay, thanks Ashwini for that. Just, some of those flashes coming in on your screen. We are, of course, in Asia's best performing index right now, and we've snapped a 5-day fall for the Nifty. It's, of course, futures and options action. We'll highlight that as well. This has been the strongest gain since almost a month for the index, since March 14, that is. Mitesh, come to you. What's your reading on this pullback that we are seeing? How would you position yourself on the index for now? And also in your recommendations, I see a Tata Motors and Jindal Steel. What's the call?
See, I think, one on the index, I'm not very sure as to whether this pullback will last and be a very strong one. Possibility of yesterday's intraday high of around 55.90 to about 5600 being tested, I think, are there, and maybe that's where we'll head towards before kind of deciding what trend or what direction we'll take. I think in the short term we're trading long on individual stocks. We're not taking any trades on the index, and that too where we've seen some kind of strong intraday buy signals. So I think I've got only one call, which is basically Tata Motors, where I would recommend buying around the 264 mark. I think it's moved up in the last few minutes, but around 264 I'd recommend it with a stop at about 259, and I would look for a price target of around 271, 273 on the upside.
There's just one quick word on an ARCOM as well. I believe it was a call that you gave in the morning today, and with the way it's moved up, I believe it would have met your initial targets. Are you still staying long on Reliance Communications?
We have booked part profits. I think very clearly, when you're trading in multiple lots, I think it makes sense if the stock is moved up by about 7-8% in a day itself. The target initially which I had recommended was around 70, half to about 71. I think that's been crossed. Overall, I think that the stock might head towards levels of around 74 to about 75. So just book part profits, and I think a good stop loss would be around 68, 80 over here, and trail the stop loss to that levels.
Okay, thanks for that, gentlemen. I believe Amritanshu is back with us. Amritanshu, you spoke about the product ranges that you're launching and the kind of growth that it will get. Just to get one clarity before we speak about your FY14 business outlook, there was a belief that Eveready in due course, possibly today, possibly over the next 3 months, would also make some announcement with regards to the land bank that you have. I know you've categorically mentioned in the past that you will not sell off or hive off the land. You will probably enter into a JV with some developers. Nothing of that on the anvil, either today or over the next 3 months?
The Eveready land bank is there in Hyderabad, Noida, Calcutta, Lucknow, and we are seeing the developments which are happening in the real estate market on a monthly basis. And we don't have any concrete announcement to make regarding this land bank at the moment. But we will see when is the right opportunity and when we get the right value, either to exit the land or to develop it with a joint development. But nothing is on the anvil which I can confirm to you today.
Fair call. The other bit would be, how would your business segments shape up? We're running short of time, but just wondering, over the next 12 months, how would your overall growth, as both in terms of volumes as well as in terms of the figures, look like for FY14, sales and the bottom line?
On the sales front, with the new product launches which we are planning this year, I feel we should deliver a 10 to 15% growth, and the bottom line should be better than that as compared to the year just ended.
All right, Mr. Khetan, we leave it at that. All the best for your future earnings. Thanks very much for taking out the time and speaking with us right now. Just back to the markets, and I was highlighting how some of the futures and options indicators suggest that the build-up in banks has been fairly strong. So the Bank Nifty is up. SBI, ICICI Bank have been drawing interest there. You can already see how the position build-up has been stronger than what the index is doing. It's pretty much the same. 16 out of 23 bank stock futures have gained in the session. And aside of banks, you're also looking at Reliance Communications and Syntex, the futures for those two counters also picking it up in trade. And that's pretty much reflective of what's happening in the cash market too. Tata Motors is a call that our technical analyst just gave, but would also want a view ahead of earnings on Infosys and TCS. Ashwini, how are you looking at these two stocks?
Well, it does appear that even the market seems to be getting into some kind of a pullback mode. So all of these stocks can have mild rallies. So chances are Infosys could rally towards 2900, 2950. Similarly, TCS again rallies towards 1625, 1650. Also because the US is outperforming. So, whenever we rally, the techs are likely to do much better than the other sectors.
Okay, let's take a very quick break on that note. On this leg of closing trades, the markets are doing very well. Let's come back and get in a fundamental voice as well. Mehboob Nidan will be joining us on the other side to speak about his sense of the markets. But it's doing well for now. Here are Dalton Capital's UR Bhatt, who's betting his money on the defenses but remains cautious on the cyclicals. Hear him out talking about what range the Nifty is expected to trade in the next 6 months?
I think the range could be somewhere between say 5300 to 5750. I think that should be the sort of range for the next 6 months, I hope. If the economy is not doing very well, and if you can see as margins are under pressure, companies are not able to pass on cost increases, it has got to finally show up in results, and so therefore I think the expectation results are not very high, but even those low expectations might be somewhat difficult for corporate India to meet. The earnings momentum may not be the reason for markets to really be expecting a bounce. IT seems to be one which might not be very bad as an investment destination today, given the situation that overall the sentiment is quite weak. And of course defensives like FMCG, pharma, and these continue to, and private sector banks, these continue to be the favorites of the markets, because these are the ones which are unlikely to fall as dramatically as the market itself.
Percent higher, 5547 or thereabouts for the index, so it's a good show really put up by the markets today. I was looking at the mid-cap end. There are some stocks which have done very well, bouncing back essentially off the lows. We're getting Mehrbun Iran in a bit. He'll be very happy. Delta Corp is up 20%, so he's been a strong advocate of that stock. It's bounced back quite smartly from the lows of 42, 43 that it posted, so that's up and about. Jindal Stainless, on that news of the deal with POSCO, is up 7.5% higher. His strength in HOEC, Syntex, so yeah, strong show all round really for some of these heavyweights. And we spoke about IT as well. Mitesh, I don't know, you probably had a call on one of the IT names in particular, but CNX IT is the other one that I wanted to ask you, because you were particularly bearish of that. Is it essentially short covering which is leading to this, or would you believe there could be a long trade too in CNX IT in particular?
I wouldn't really take a long trade needed over here, but yeah, I think, we have when you're trading the stop loss, you've kind of been triggered out. I was looking at target around 6850. The CNX IT index made a low of around 6900, and we had a stop at about 7000 which got triggered out. The trade was entered around 7150 odd levels. So my chances are it might bounce back a bit more. I think very clearly with the market kind of finding its feet. Good chance that we might see CNX IT head towards levels of around 71, 10, 20 on the higher side, which is where the 20-day average is placed, and maybe from there we'll see selling resume again.
Okay, I'll just highlight a few more stocks. I mean, HDFC is picked up in the session as well, aside of the other financials. In the top 10 names, you are largely looking at banks for the index. Pharmaceuticals, Lupin is picked up as well in trade. Mitesh, you have a call there?
Sorry?
Lupin.
No, Lupin, not really. We had a call a few weeks back when it was out. It's kind of completed a pullback to those breakout levels of around 605, 10 and bouncing back. Maybe it will go up to about levels of 640, which is the earlier highs. But I think a good buy becomes only around levels of 615 to about 610, and keep a stop below 605 and look for a 640 kind of target.
Ashwini, the other one that I wanted to come to you for are a couple of these stocks which are the stronger names which are bouncing back today. The likes of HDFC, one, the top gainer on the Nifty. HDFC Bank has jumped up too. And the third one being, say maybe Reliance Industries, which is up close to 0.5%. But predominantly the HDFC twins, they were the top losers for a couple of days, are bouncing back now. Is this also in line with the market bounce back, and eventually you think they'll head lower, or do you think this wave can probably last a bit longer for the stronger names at least?
It can maximum last 3 to 5 days. See, we have to be clear that this is a bear market, and a 2-hour rally does not change that fact. So, let's not start talking in terms of something outperforming. Whenever the selling comes back, it will come with equal ferocity in all of these stocks. Yes, HDFC Bank may be the last ones to fall, but fall they will, and people should be ready for that. I don't think any kind of rally can so easily turn the bear market around unless we start trading at least about 57.50 for starters. So that's a long way off, and you can have a 100-150 point rally at any point, but please don't get carried away.
Right, Ashwini, come in on a Syntex Industries build-up seen on that counter?
Today you will see build-up on all counters, because it seems that we are putting in some short-term low from where a 3 to 5 day type of move can be possible. But I don't think Syntex will get too much beyond say 52 to 53. So again, sharp rally, maybe one more day where short covering will take these smaller stocks higher, but slowly you'll see that they'll start to peter out much before the larger stocks.
Okay, we'll just get in Jyoti Jaipuria's views as well in just a bit. I was just looking at the JSPL, mind you, the reason I'm pointing it out is for somebody who missed it at the start of the show, this one is a consensus sell idea from both Ashwini and Mitesh at 329 currently, a stock which is in the red while the market is 1% in the green. So JSPL should be watched out for very carefully because it's a consensus trading area with both our experts. The other one, and while we've gotten a view from Mitesh on that one, which is Reliance Communications, just ADAG as a pack, Ashwini, would you, one, touch anything there? And two, would it be RCom? And if so, is it good enough to initiate longs even at these levels?
Well, Reliance Communication seems to be much better than other ADAG stocks as well as other telecom stocks. But in a bear market, how much can you, push on the upside? That remains to be seen. From 55, you can say it's had a large rally of about 30%. But clearly people who got in around those levels, if you get say, 78, 80 in this run, I think that should be it on Reliance Communications. And that goes for other ADAG stocks as well, that if they correct on the upside 3 to 5 days, just go ahead and go short in them, because I don't think downside is done in these stocks.
Of course, in the session there's a lot of activity that we are seeing in mid-caps, but like Ashwini pointed out, in a rising tide most stocks will rise, so there's no exception to why the market breadth is holding up. Let's get another perspective on the markets, a fundamental one. Jyoti Jaipuria, Head of Research at BofA ML, joins in with his views as well. Jyoti, good to have you on the show. While most market participants are slightly rattled, some are shaky and some are nervous because of the intensity of the sell-off. You're not surprised. Last time when we interacted, you saw this coming. How do you explain the market sentiment right now?
Yeah, you see, ultimately the sell-off comes or doesn't come depending on where the fundamentals are going, and there was clear weakness in the economy, there was weakness in earnings. So my call for the last 2 years has been that earnings will see downgrades, the economic numbers will see downgrade, and unfortunately I continue to hold that call that analysts and economists are still too optimistic. Till this downgrade settles down, till we get numbers which come in line, which start surprising analysts, I think the markets will always remain edgy and in range bound manner.
Jyoti, where does the dust settle now? How much more downside to go before we can call it a bottom or that we are near a bottom?
There are two ways you can have downside. One is you can have a market doing nothing for the year. So in some sense, because of the time correction, you get valuations which start coming cheaper. The other is the markets fall and then start moving up a bit. So some of that depends on where other markets are going, what are the international news flows that we are getting. But if we look at the results season again, it's going to be one where nobody really going to get excited about the results season. Results will be weak, and I think we'll have FY14 numbers which are looking extremely high from the analysts. They'll see a lot of downgrades. So at least that is going to be a negative for the market. If there is some other events which help, maybe oil is coming down, so that's one thing which probably is helping. If we see a big pullback in oil, RBI may have some room to cut rates, which may help cap the downside on the market.
Right. Also, at your annual conference, when we interacted with some of the investors on the sidelines of the conference, the mood was to buy and invest into Indian equities. But suddenly, FIIs are turning net sellers after being buyers for the first 2 months. Do you think this is some kind of a structural adjustment, or are FIIs, just taking some money off the table, profit booking perhaps?
See, their buying and selling is not just determined by India, because for them India is one of the markets they can invest in. And I guess what's happening now is, if you see, emerging markets per se are not doing as well as the developed markets. So probably, the US is suddenly looking good. Japan has had a great run. So to that extent, Japan was a market which everybody had been underweight on for such a long time, that there are all these developed markets which suddenly have started doing well.
most of the emerging markets are going through some similar problems, which is, the politics has become a concern everywhere in some shape or the other. Inflation is a concern in a lot of places. So, whether it's inflation, whether investment not picking up, but growth is getting a concern in most of these places. So, data is surprising on the up in a lot of the developed markets. Data is actually disappointing in a lot of the emerging markets. So I think if you see the fund flow also, that's the way the flows have been going. More and more money is going to developed markets rather than emerging markets. So that's probably one of the factors which is determining what they're doing. The second is, of course, India is not really been as great. There was a lot of hopes that RBI would cut rates more significantly, or they would, at least sound like they're cutting rates more significantly, which, has not really worked out, because I guess from their point of view, the headline inflation is still not coming down fast enough. So what people were looking for is they were hoping there'll be some change, which somehow has not really been happening in India.
But if I look at the consensus for the FY14 earnings, the current year, it's about 17%. But in your strategy report, you are making a case for the FY14 Sensex EPS growth to be around 11%, which is a bit bearish compared to some of the others. What's the rationale behind this?
Yeah, it's actually, like I'm saying, it's below 10 also. So my view is that it's going to be 17 clearly seems, to be very, very optimistic. I think we're going to see downgrades, because if you see GDP, I don't think we're going to get a GDP growth substantially more than 5.5%. Margins are, at a 18-year low in India, but you can't really see margins changing at the moment, because if you see core inflation is quite low. Basically, clearly there is pricing pressure in the economy. So I think, analysts are being too optimistic in their outlook. I think a lot of people are just counting on a turn in the economy over the next 6 months, which, there doesn't seem to be any basis to believe there's going to be a major turn. So I would think, this will get downgraded substantially. We'll probably end up, hopefully, closer to 10% rather than, 5%, which we'll get for FY13.
How does the upcoming earnings season fit into your game plan then? Could it be a game changer or trigger for the market, both on the upside or the downside, or do you think it's already priced in?
See, the good thing is most people are expecting it to be a very bad earnings season. So to that extent, at least, I think expectations are not very high. Otherwise, if expectations are high going into such a season, then, the chances for the market sell-off becomes much higher. So that's the good thing, but I think the bad news is that earnings is going to be very weak. It's not really going to surprise on the upside. We are looking at like flattish earnings for the Sensex companies. So to that extent, it's not going to be a big trigger for the upside. My view is maybe we have to think of like the market in a range and hope that, the downside is not really broken in a big way, because at some point we get some nibbling of, okay, markets have fallen a lot, valuations are looking cheaper, so people come and nibble and keep buying a bit. And hopefully, RBI has got another policy coming up. Let us see how they look at things, because they have growth which is, I think, much slower than what they expected it to be. At the same time, the headline inflation is not come down as much as they want, but I think the core inflation is down quite a bit. So maybe, if we get some rate cut from the RBI or signals that they are looking at cutting rates more significantly in future, that may help keep the downside protected.
Recall, earnings are likely to surprise us on the upside, a few people believe, though of course you haven't said that. But valuations surely have come down. There's a long list of stocks which have cracked the historical averages, and in fact nearly 70% of the index as well. What's your sense here?
So, that valuations, whether they are cheap or not, ultimately depends on where the earnings settle down at, where the E settles down. So if we go back to what, we'll get in earnings now, if you go back to, 4 years ago, in September 2008, we thought FY10 earnings are going to hit a Sensex EPS of 1200. We are still in FY13, 3 years later, 4 years later, we're still struggling to hit 1200. Like even FY13 earnings are not going to be 1200. So to that extent, sometimes when you do these valuations, you probably end up making a mistake simply because the E which you are taking is too optimistic. So I think, markets are probably not as cheap as people think it is, simply because the E is still very, very high. I think the E is not going to materialize, and to that extent, markets may not be as cheap.
Okay, thanks a lot for that. Actually, Jyoti, would request you probably stay on if you can. Just need to go across to our technical experts. It's 2:55, that time of the show, when we get in the trading ideas. Ashwini, to you first. What is it that you are recommending as an idea at 2:55?
Well, the market has since crossed 55.50, and when that happens, real estate tends to do extremely well. DLF has corrected to its 200-day moving average, so this is a buy with a stop about 230. Look for targets about 245, 246.
Fair enough. Mitesh, what about you? What is it that you'd recommend?
I'll go along on Bharat Forge. I think that's the one which is giving a strong buy signal. So buy with a stop at about 211, and I would look for target of around 225 to 26 in a matter of 2 to 3 sessions. After a while, a call on Bharat Forge, really. But yeah, it's doing well for now. Delta Corp is the shining star in the mid-cap space. Subrata Roy and 3 Sahara members, rather, of the employees of the group reached the SEBI. Mind you, this is with regards to what we spoke in the morning, the SEBI summons in regards to the recovery of the 20,000 crore dues that SEBI has asked Sahara to refund. So Subrata Roy and 3 other Sahara directors have reached SEBI for the personal interviews. What you're seeing right now is live footage of those people reaching the SEBI premises. It'll be an interesting one to track, not per se from the listed stocks which get impacted, but more so from the business angle as well. It's a large sum of money that a lot of people, or rather that SEBI's asked Subrata Roy and Sahara Group to refund. So it'll be on top of this story for sure.
That's the amount that you're talking about. So the summon is to essentially verify details of personal and group assets and to recover unpaid dues of 20,000 crores. That's close to 4 billion. In fact, a little higher than that. So a lot of money, like Neeraj said. Let's get in Sandeep Bagle to give his quick recommendation, stepping into the last half an hour of the session. Sandeep, what is it that you have for our viewers?
Tanveer, a sell in Adani Enterprises, stop loss 207, target 194. A sell in Crompton Greaves, stop loss 93, target 83. A buy in Arcom, stop loss 68, target 76. And a buy in Adani Ports, stop loss 146, target 154.
Really short up has Reliance Communications. Sandeep, you will still initiate the buy at 73 rupees, is it?
Neeraj, I would wait for some kind of a declines to maybe 71, 72, that range, and then initiate a buy.
Okay, so not necessarily at 73, but it's really shot up in trade, 13%. So strong show put up by Reliance Communications in trade. That probably is the other stock, in fact the main stock of the trading day today. Let's get in Mehrbun Irani with his sense of the fundamentals. Mehrbun, good having you. Thanks so much for waiting by patiently as well. Just a word really on the markets as well, Mehrbun. 1.25% higher, something that we haven't seen for the last few sessions. In fact, when Europe opens, markets tend to correct. It's bounced back quite smartly today, and lots of individual names as well flying around.
I think, Neeraj, if you see that we have been one of the worst performing markets this year, and there is the disparity or the difference between the way the world markets have progressed, I would say most of them, in 2013 and the way we have performed, I think there's a lot of difference. The fact is, what happens from now? I think we need to accept the fact that what has happened in Japan is a very, very, very important event. There's a distinct possibility that some funds would go away to Japan and to US, which has progressed much better than what most expected. So I would attribute a little bit of selling from the ETFs as mainly because of that particular reason. I don't think politics is the reason why FIs or the ETFs would be ending up selling into the market. Now what happens from now is honestly a very difficult call on the short term angle. Will we rebound from 5,500 and go to 58, 5,900? Distinctly possible. Or will we go one down to 5,200 or 5,100? Also possible. I personally feel on a fundamental basis we should not fall more than 8 to 10% from here index wise. The fact is, the strategy is very simple. Have the top 20-25 stocks. At what level I'm going to buy them? For example, we are buyers in HDFC. It's come down to the level of 750, 755, where we started buying into it yesterday. We are looking at IndusInd Bank coming to 375, 380, and we'll buy into that because we are quite confident from the level at which we are going to buy, we are going to see at least a 20-30% appreciation within the next 12 to 15 months. But that's the strategy which people will have to employ. Don't try to be a Robin Hood and try to identify the multi-baggers right now. Going for solid frontline stocks at levels at which you feel the downside is limited, but I'm sure to make money over the next 12 to 15 months. This is the time where you need to build your portfolio for 2014-15, which I personally feel could be a great bull market ahead for us.
Bye.